Every month, you get paid, right? Maybe once a month, maybe every 2 weeks. And what do? You deposit that paycheck into your checking account. Totally normal, totally innocent. But here's the truth that the banks don't want you to know. Every time you do that, you're losing money. Here's why. That money sits in your checking account, doing absolutely nothing for you. Meanwhile, your bank, they're taking your cash and lending it out, earning interest on your hard-earned dollars. Before I start, if you're tired of scams and want a real solution for making money online, check out my #1 recommendation in the description below. It's kind of like giving your friend $5,000 to hold for you, only to find out they're renting it out to someone else and keeping the profit. You wouldn't do that in real life. But that's exactly what you're doing with your bank. And while your money is sitting there, your mortgage is actively racking up daily interest, costing you tens of thousands of dollars over the life of the loan. That's where this concept of accelerated banking comes in. Sam Kwok and David Bruce have been educating homeowners on this strategy, and they claim it's helped their students save 50 to 70% on mortgage interest without changing their income or refinancing their loans. So, what is accelerated banking? Here's the short version. It's a method that uses your cash flow, your income, to fight interest instead of feeding it. At the heart of it is something called a HELOC, a home equity line of credit. Now, before your eyes glaze over, hang tight. This isn't about going into more debt. It's about using a HELOC smarter, as a powerful financial tool that works in your favor. Instead of letting your money rot in a checking account, accelerated banking redirects your income into a HELOC, and from there, you use it to offset your mortgage interest daily. Daily, not monthly, not yearly, daily. That means more of your money is attacking the principal, which is the actual loan amount, not just padding the bank's profits through interest payments. Let's make this real simple. Imagine your mortgage is $300,000. Let's say your monthly payment is $2,000, and only $500 of that goes toward principal. The rest? Poof. Interest. Now, imagine instead of just making those payments, you have a HELOC. You deposit your entire paycheck into the HELOC, reducing the balance and avoiding interest. Then, you use that same HELOC to pay your bills, buy groceries, cover utilities, all of that. What's the difference? Well, since your balance is being reduced daily by your deposits, you're avoiding interest daily, and that adds up. Now let's address the elephant in the room. Wait, aren't HELOCs risky? Aren't those like second mortgages? Good question. And yes, they could be if you don't know what you're doing. That's why Sam and David emphasize education before execution. There are 2 types of HELOCs they mention. First lien HELOCs. Second lien HELOCs. The first lien replaces your mortgage entirely. The second lien sits alongside your mortgage, kind of like a financial sidekick. Both serve the same purpose. Give you a flexible line of credit that you can flow your money through to reduce your interest burden. This isn't about borrowing more money. It's about managing your existing money better. You're not increasing your debt. You're leveraging your existing cash flow to crush your debt faster. Still skeptical? Fair enough. But listen to this review from one of their students, Michael Heil. He said, "From the get-go, I could tell the Kwok brothers were different from other online webinars and businesses. These guys have a lot of integrity, and I believe them when they say their goal is to help people. They were extremely patient with me and answered all of my questions. Couldn't have asked for a more positive experience." That's just one of many success stories. Even critics admit the only downside is that the program focuses almost entirely on HELOCs. But guess what? That's the point. It's the core of the strategy. If you watch the webinar, you know that going in. Let's zoom out for a second. Interest rates have gone through the roof lately. Inflation is squeezing everyone. The cost of living is insane. And most Americans are living paycheck to paycheck. You don't have time to play the 30-year mortgage game anymore. You need every dollar working for you, not your bank. Accelerated banking flips the script. It puts you back in control of your money. Instead of being at the mercy of a bank's interest schedule, you become the one calling the shots. And the truth is, you've earned that right. You wake up early. You grind. You commute. You deal with stress. You miss time with your family. Your money should be working as hard as you do. Here's what Sam Kwok said. "What we want to do with accelerated banking is teach you how to fight for your hard-earned dollars. That way, you can reallocate those dollars for your financial goals, such as educating your children, planning on retirement, having money to invest in real estate, being able to increase your net worth, and being able to think about generational wealth. This isn't just about paying off a mortgage faster. It's about financial freedom. It's about keeping more of your money so you can build a future on your terms. And hey, if that sounds like something you're ready for, maybe it's time to learn how this works in detail. Want to see if accelerated banking can work for you? There's a free training by Sam and David that breaks it down step by step. Before you leave, if you're tired of scams and want a real solution for making money online, check out my #1 recommendation. Click the link in the description to see the best business to start online, which made me over $26,000 last month alone. If you found this video helpful, don't forget to like, share, and subscribe to the channel for more reviews and honest insights. Thanks for watching.